We're talking about 3 critical things a new trader needs to do with Dan Gramza. Welcome, Dan.
Thank you, Tom. Good to see you.
Always a pleasure, Dan.
Thank
well,
you.
you teach traders around the world, and so I mean, this coming from you should you've walked a lot of traders from that initial phase to becoming a successful trader. So, what things do they need to do to get on the right track?
Well, I think there's a few basic things that are kind of critical for anyone who wants to expose their markets and expose their money to the markets and control that exposure. One is to truly treat it as a business. We oftentimes hear that, but what does that mean? It means to have a very specific logical process that you're going to use to expose your money to the market. I think the critical steps there is that you take, which is the second part, is really to take your time. A lot of people say, you got to get in this market right now because it's going to be happening. Well, I've heard that for over 20 years. There's always an opportunity. So you want to take your time before you get started. And what I mean by that also is to take your time to analyze the approach that you're going to use. Look at how it reacts to the markets that you're interested in. And that really brings me to the third area. Pick a market or a sector or a futures market that you find of interest, one that sparks your interest in the market. Take that one market or that one sector and pick the strongest stock in that sector and focus all your attention on that. Take it apart. Take your trading technique and concept and apply it to that market so that you have an idea of what it looks like when it works, you have an idea of what it looks like when it fails, you have an idea of how much risk you should take on this trade, you have an idea of how patient you should be with this trade, and it's a simple thing. All we have to do is count the number of periods from the beginning of the trade to the end. So in a clean trade, if you and I know this trade may last 2 weeks, well then we know if we're going beyond 2 weeks and this hasn't done anything, again, we're probably in a hope trade, and it's probably not going to work well for us. So we want to understand how patient we should be with the trades. Oftentimes, I see traders getting into a trade, waiting for something to happen. It doesn't happen. Then they get out, and then for sure, when they do that, it's going to happen. It's going to be in their favor. But one of the reasons why they have a tendency to do that is they're not sure how much time to give that trade. So whether we're talking about a day trade or a longer-term trade, the other aspect of that is that we don't want to ask something from the market that the market can't give us. So that we don't want to say, get going when it's a time period where we have very low volatility in this market. For day traders in the U.S. time zone, it's usually between 10:30 and 12:30 Central Time because New York goes to lunch, Chicago goes to lunch. And if you were a day trader and you're now trying to trade this market in that period and you're saying, come on, get going, well, it's not going to. So we don't want to ask something from the market can't give us, and we don't want to ask something from our trading strategy that our trading strategy can't give us.
Well, you deal mainly with with futures markets, but you also deal with stock markets.
Sure do.
Do you feel that new traders, can trade one or both, or do you think some futures people start out as futures traders where they're really better suited to being stock traders?
That is a very interesting question. I guess my feeling is for someone starting out that they pick something that they feel comfortable with from the concept point of view. If the idea of stock investment feels comfortable to them, I would stick with that. I wouldn't do both at the same time. Or futures, if they like the idea of maximizing their capital. If they're comfortable with the idea that there's an expiration. Some of the issues, because there are different investments. And some people say this is better than that. It's not true, in my opinion. They're not better, they're different. So it's important, either one, that we understand what those investments are. And whatever our interest is in, then I think that's the direction you should go, but not both at once. And also not to trade the entire stock market at once either, because that feels overwhelming. Same thing in the futures. I see so many people who want to trade the futures markets. And what do you trade? Currencies, indexes, all these different markets they can look at, and they feel overwhelmed. So I think it's important to narrow that choice.
Particularly when you're starting out, the narrow the better. I mean, it takes a professional like yourself to monitor 10 or 12, markets looking for a trading idea on that particular day. But for the new person, that's they're asking too much of themselves.
Exactly. When I started in the options exchange in Chicago. Then I went over to the Board of Trade. And what I did there is I picked one market. Now, at that time, it happened to be the U.S. Treasury bonds. That was the hot market. But I understood every nook and cranny of how that market moved with respect to my strategy. And here's why, Tom, I think it's important. Not only does it limit some of the feeling of being overwhelmed, but it also allows a foundation to be put in place. So that now, if you and I understand this market well with our strategy, when it works, when it doesn't work, how much risk, how much profit, how much time to give that trade, then I can relate that to other markets. So if you and I want to trade stock indexes, because we find that interesting, then I can relate that to currencies. How do they trade that's similar? How do they trade that's different? And if I understand that first market well, I'd say, oh, yeah, here, this doesn't do that at that time. Or this is very aggressive at this time. So it allows me to use that as a reference to other markets that I want to trade. So that's why I feel it's important to narrow that choice, take our time, and treat it truly as a business. You know, my equity run is my production report, is the way I look at it. I think the last component, Tom, that I think is important is not to take it personally. You know, there is no personal connection to the market. The market is a perfect trading partner. It doesn't say, oh my God, you're back here again. I can't believe you're going to do that again. And you're going to buy? Oh my, you know, it doesn't do that, as we both know. What it does is it's there to be there for us. It'll take the other side of our trade. Our inventory always stays liquid that way. So it's a perfect trading partner. What you and I do is that we make a decision based upon the information we have at that time, like any business person does. And based upon that decision, hopefully I'm going to make the most informed decision I can make. The results are the results. I don't control that. So I think it's important that people do not take it personally, that they look at that and say, did I make the right decision? Did I follow my strategy? If I did, good job. Am I going to have losses? Absolutely. Am I going to have profitable trades? Well, we should if we were following our strategy correctly.
Great. Thank you very much, Dan.
My pleasure.
You've been watching the MoneyShow.com video network.